Hello everyone, this is Karsha from the Boutique Accounting Limited, operators of the Cash Lab. So today I just want to talk about a few financial reports that it's good as business owners that you understand. Now there are a lot of reports, but I'm just going to talk about three today because I know it can be very, very overwhelming at times. So the first one, I'm just going to talk about the balance sheet, the income statement or the profit and loss statement, and the cash flow statement. Now the balance sheet, I like to think about the balance sheet and the profit and loss or income statement as, think of like you're watching a movie and think that you might take a picture of a certain scene So for me, the balance sheet is just a picture at a point in time. This is a still shot. This is what is happening in your business as at September 30, as at December 31. It's telling you what is the position of your business at this particular point in time. So in the balance sheet, you're going to see what is it that the business owes to other persons and what is it that the business owns. So you're going to now see assets. What is it that the business owns? Those are assets. Just keeping it simple. So you're going to have if the business owns any equipment, any machinery, do they have any cash in the bank? Just some examples of what assets are. What does the business owe others? You could have certain loans, short term, your creditors, or longer term, you might have a line of credit, or you might have taken out other loans for the business. And also the balance sheet tells you what is it that as the owner or owners, the monies that you have invested in the business, your equity in the business. And it tells you after the business has made a profit or loss, what is the net impact on that equity? So basically that's the balance sheet telling you exactly what the position of the business as at that specific point in time. Now let's talk about the profit and loss account or the income statement. That is like a movie. So that's telling you that over the last 6 months, over the last 12 months, 9 months, what has happened in the business. What have you sold? What are the expenses that you have incurred as a business over that particular period? And the net impact of what you received and what you spent, your expenses, is going to tell you if the business made a profit or a loss at the end of that period. Now, there are some adjustments that as a business owner you might not, depending on how you account for your books, that you might not adjust for monthly, like taxes, depreciation. Yeah, most times the accountant at the end of the year, at the end of the period, will do that. But I do know that there are sometimes, some business owners like to be proactive and they like to have an adjustment made for that, a provisional adjustment, an estimate made for that monthly. Now let's talk about the cash flow. The cash flow statement shows how was the monies spent in the business for that particular period. So for the last year, for the last 9 months, what did we actually spend money on? Did you spend money on any new equipment? Did you spend money on any machine? Did you repay any loans? If you are a corporation, did you issue any shares? Did you pay any dividends? It's going to tell you exactly how the monies were spent in the business, the actual monies that the business have. What's the net impact of effect? The net amount that you paid to your debtors, that you received from your debtors, sorry, and that you paid your creditors, right? So it's telling you basically how is it that you spent the cash of the business. And the ending balance on the cash flow statement should agree to the balance that you have for your reconciled bank account in whatever software, if you do it manually in Excel, right? Or just paper. I know there are still some persons who do paper stuff, and that's fine still. So let's remember those are the three main statements we're just talking about today. And it's very important that you really understand what these statements are saying. I like to take it a step further to highlight emphasize the importance of looking beyond the numbers, because these statements are showing what has happened in our past, right? So they're saying what has happened before. But analyzing them, applying certain key ratios does help you to be proactive, right? So do you need to change your strategy? What is going wrong? What is going right in your business? Reviewing these statements, performing certain analysis, certain ratios, computing them does help you to get a better understanding of what's happening in your business, what's going right, what needs to change, any strategy changes, and in line with also what changes in your business environment, the economy, what are some changes that you can make. So if you have any questions, comments, you can shoot me a comment or email or so, and I'll be happy to respond. Thank you.